Wow is all I can say. Did the markets bound up the day after Christmas? The S&P 500 up a whopping 5.05% for the day on Wednesday. The NASDAQ 100 is represented by QQQ up a whopping 6.24%. We see consequently bonds down 1.07%, gold down 0.30%. But let's jump first into the S&P 500 and look at how curious the weekly chart is. Even with that big up day, the weekly chart so far is a big down candle. Derivative oscillator still gaining downward momentum. Price percent oscillator not going down at the strongest angle it had been, but still going down quite strongly. We go from the weekly to the 2-day. And again, this is just the latest 2-day finished drawing on Monday. So this is the first day of the latest 2-day candle. And again, when I say latest, it's not finished drawing yet. It'll finish drawing on Thursday afternoon when the market closes. But what do we see going on? Well, we see that the derivative oscillator's lost just a little bit of energy. Price percent oscillator has lost a lot of that downward momentum. It's sort of hockey stick to over, losing some of that. We look at the down candle. It still is a down candle on the Heiken Ashi candlesticks, even though it was a big up day. First day of the latest. Now let's look at that 4-hour chart. You can see a pullback in the morning and a strong up move in the afternoon. We can see that the price percent oscillator has spiked over, flat in the morning and up in the afternoon. Derivative oscillator in the afternoon lost lots of downward momentum, but still, with all that up movement, still negative. So remember, the market sentiment on the 2-day chart and the weekly is still down. So is the 4-hour. Hasn't crossed over, may cross over. The market continues to boom up on Thursday. But again, remember, overall market sentiment, even with a big up day of over 5% gain, is still decidedly down, okay? Still strong down sentiment. All things being equal, the market always tends to move in the direction. The market tends to move in the direction of the largest chart, which is still down. So we'll wait, watch, and see just how things continue to play out. Now, where the biggest up move was in the NASDAQ 100. However, we look at the weekly candle, Heiken Ashi candlestick, still down. Price percent oscillator still down. Derivative oscillator has lost a little bit of that downward momentum. Of course, it's still negative too. 2-day chart, again, sort of a hockey stick going flatter on the price percent oscillator. Derivative oscillator still gaining downward momentum. We do see the makings of a green candle. Now, again, solid green, but a long tail on the bottom. So you can see where things just came to a halt right there around the 148.77 mark on the Heiken Ashi candlestick. First day of that 2-day candle. What do we see on the 4-hour chart? An even bigger up move. And again, price percent oscillator hasn't crossed over. Derivative oscillator lost a lot of downward momentum. So we'll continue to watch. Again, market sentiment still down, even with this big blast of an up day. So just continue to watch. What are we waiting for? Remember what we've been waiting for. Remember how we haven't been in this market to get hammered. Why? Because of things just like what we saw today. That's why we wait for pullbacks before we jump into slam downs like this so that we can find an appropriate jumping in point. And if we can't find one, we don't get in. Why? Because we're not fools. We are trend followers, and we have to have appropriate entry points to follow trends. That's why we don't act like idiots and lose 5 or 6% in a day, almost, well, 6.25% on the NASDAQ 100. So all of you who were saying, hey, why aren't we jumping in on this down move? Because we didn't have a safe entry point. We did earlier, remember, $10 or more that we made when we first had the weekly vertical crossover in our practice trades all the way back in October. Remember that? How well that did for us? We actually had a second opportunity. Well, we took those, but we didn't take the last ones because it was too crazy. And that's where the rebounds hammer you. That's why we're not fools, and that's why what we do works most all the time. And when it doesn't, we learn from it, pull that trade, and wait for one that does. Let's go into TLT, 20-year bonds. What do we see going on there? Down 1.07%. And of course, We're still in a confirmed up move on the weekly chart. Derivative oscillator still gaining upward momentum. Warned a little bit about the fact that the wick on the latest candle, weekly candle, isn't hitting as high as the prior one did. That gives us some concern. Derivative oscillator, price percent oscillator still heading up. Go from the weekly to the 2-day, and we see the real blow off of steam in this 1% down move happening on the first day of this latest 2-day candle. It's a red open box, almost a spinning top, a long wick on the top and a little wick on the bottom, red open box. So it's not a strong down candle at this point, but the price percent oscillators flattened. Derivative oscillators lost lots of energy just on this first day. Look at the 4-hour chart. That's where we see things caving over down in the morning, and that was your jumping in, your jumping out point before that larger down move in the afternoon. So again, we don't want to lose what we gained with a jumping in point, and it's getting close to that. So hopefully, if you were in a practice trade, of course, you're supposed to be paying attention. You saw that confirmed down move in the morning. It was your pulling out point before the afternoon. And again, maybe we'll have another opportunity, but remember, all the way back on the morning of Monday, the 24th, just that Christmas Eve, we saw the derivative oscillator go negative. Price percent oscillator starting to laminate, getting very close to it. So that's where we are on 20-year bonds. Lastly, we go to gold, down 0.30% for the day. Gold is gaining upward momentum on the derivative oscillator, price percent oscillator heading up. Nice, strong candle so far for the week. We look at that 2-day chart. And again, continuing to grow nicely as far as the Heikin-Ashi candlesticks. Derivative oscillator actually lost a little bit of energy. Price percent oscillator also started to level out, not going up at the same strong movement. And of course, up movement in the morning. We saw the real loss in momentum in the afternoon with almost a doji there. Lots of indecision tending down. Derivative oscillator lost momentum in the afternoon. Price percent oscillator heading down. So again, warning bells going off. If you jumped into gold around that, 118.60 mark or so, just realize gold closed the day at 120.17. So keep your eye on the prize if you're still in gold. Haven't had a crossover going down yet, but just watch and make sure that that virtual trade you're doing doesn't go south on you. Continue to monitor things as you should always do. Look at how gold's doing in the morning. And if you do need to pull that trade, take your profit. Be happy with it. $2 in 2 days, not too bad. So, well, it's a little more than that, 4 days with a couple of 3 days off. Okay, folks, that's where we are as we end the day on Wednesday, go into Thursday. Hope you had a wonderful Christmas and are looking forward to a happy New Year. If you haven't purchased our book, please do so. If you have some money and wish to be helpful at the end of the year, you appreciate what we do, become a Patreon member. Lots of great benefits there. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.